Hello, and welcome to this week's Motor Trade Radio podcast. Powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters from across the franchised and independent dealer sectors.
Well, here we are, Phil. It's the last pod of the month. Can you believe that?
Oh, that's April gone. Yeah.
Yes.
Yeah. It's very worrying, if I'm honest with you.
Yeah,
How quickly the year's flying by.
Yeah, that was gone in the blink of an eye, wasn't it?
Yeah. Or not flying if they cancel the flights, if they continue to cancel flights as we move towards summer holidays. But yeah, it's a whole different debate.
Lufthansa have cancelled 20,000 flights, I heard.
Yeah, to try and save fuel for the long-haul summer breaks. Yeah. Lots happening at the minute within that world, but we'll try and keep away from that for the minute. But lots going on. Bit of nice weather, I think, this week. People are appreciating a bit of nice weather amongst all the doom and gloom. But we'll try and keep away from that a little bit. We've got a couple of upbeat stories, haven't we? Which is
we have indeed. Yeah. So if you're fed up with the doom scrolling in the global economic and political world, then we've got a great recipe for you today. Because, as you say, we've got some upbeat stories. We've got Ian Godbold in the second half joining us after the break for this month's top tip. And this one's all about the lost sale problem, which Ian believes is one of the biggest blind spots in many dealer groups. But don't worry, because he's got a solution.
Yeah. So he'll keep you upbeat and positive and optimistic, and that's his will. And the other thing, just the other shout out this week. I know it's been the commercial vehicle, the CV show this week, and from all accounts, there's been some awards and bits of things going on there. But big show, big outer out there. But I think Verizon was there. That was their debut, wasn't it? From our conversations on the podcast with Callum from Verizon, who on the 18th of March now, CV Show was their debut to the market for their electric commercial vehicle, wasn't it?
Yes, he did give us a bit of an inside scoop on that, didn't he? When we spoke to Callum James, and really set out the whole role of Verizon, how they're launching in the UK, and the way that they were going to use the CV Show very much as the sort of springboard to promote what they're doing and to reveal the new van. So big week there for Verizon. And do catch the podcasts that we did with him, because I was just a fascinating insight into a new brand coming into the UK and how they were approaching it.
Exactly. So if you have been to the CV show this week and you haven't, and you've seen the Verizon there on show but didn't get a chance to go and have a talk to the team on the stand there, then have a listen to the podcast, as Curtis said, from the 18th of March, and Callum does sort of give you a little bit of background, who they are, where they've come from, and what their intents are within the UK and then into Europe as well.
You're listening to all the chatter that matters on the Motor Trade Radio podcast, powered by Motors and Cazoo. If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers and decision makers on one of our supplier special episodes, then get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured in our supplier specials include Autoglim Lifeshine, which we posted earlier this month, Impel, Prospecting Dynamics, Generational, and MTC. You can find them all in your podcast feed, along with some of our recent OEM specials, which, as we were just mentioning, include Verizon as well as Ion and Shangan. So if you'd like us to profile your business, then just message us at motortraderadio@yahoo.com.
You're listening to all the chatter that matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
Headlines this week come from AM Car Dealer, Motor Trade News and BBC News. And we have two exclusives this week, starting with Cox Automotive's newly published Insight Quarterly has just been published, and we'll be taking a look at some of the key findings. Our other exclusive is JudgeService's latest Dealer Barometer, looking at dealer confidence levels in Q2, which have actually risen since Q1. Average EV ranges now outstrip average mileages. So does this make range anxiety a thing of the past? We've got some full year financials with Swansway profits up and turnover exceeding £1 billion, while Pinewood also sees turnover and profits up in its second year of trading as a standalone business. And we'll finish this week with a look at the FCA's car finance compensation scheme faces a challenge and possible delay.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
So we're going to start with the Cox Automotive Insight Quarterly, the IQ report that you put together, Phil, which, as we record today's show, it's just been posted online. So it will be picking up some headlines over the course of the next few days. But this has obviously been a project that you've been working on very closely over the certainly recent weeks, and I suspect even longer. So
Yeah.
what are some of the sort of key takeaways for you from this?
No, you're right. I mean, it started off as an annual report and now into quarterly. So you kind of finish one and you're straight on to the next. And as you can imagine at the minute, with all the shifts and dynamics within the automotive sector, trying to keep abreast of it is interesting. But yeah, I think clearly within the report we continue to reforecast the new and used and EV volumes expected for 2026. So readers of the report can see where our upside, our baseline and downsides are for the remainder of this year and where we expect to finish and why we expect to finish there. And without, we've obviously within the new car one, as you can imagine, geopolitical position, everything happening in that space, the Chinese and the new entrants and what they are going to do to shift that environment and how the dealers are responding, etc. So doing a bit of that, obviously used cars around residual value and the spread of shift of electric vehicles. But included in the report are some friends of the podcast that we've got. Steve Young, he's in the report as a contributor. He's looking at the minefield for automotive distribution. Obviously, again, looking at that sort of geopolitics and protectionism and misalignment of electrification policy coverage as well, policies and coverage, talking about that in terms of the UK and the European market. Chris Green is in there from founder and CEO of Regit Cars. He's looking at talking about margins tighten and competition increases and automotive advertising needs to move beyond the volume-led platform-centric models and more towards target data-driven strategies. And we've also got Alistair Campbell, who is the CEO of Market Check UK, and he's talking about the missing generation in used vehicles and trying to understand what's happening in that dealer retail marketplace, thinking about that, the 4 to 7 year old segment now that is obviously now the sector that is being hit by the pandemic shortages back in a few years ago there. And then finally we've got Lee Swinard. He's talking about the EV slowdown and restructuring impact on the sector. As we've talked about, Curtis, a few times, this U-turns from some of the manufacturers as they decide to come away from that big shift towards EVs in terms of that production market. But yeah, quite a bit of that, but very much, new entrants and stuff like that.
Yeah, and I've had a sort of brief look at the report. I was particularly interested in the used car section because you make the connection between low levels of car production in Europe and how that's constraining the flow of some of the key quality used stock to the UK. whilst we're also seeing a growing stock levels of younger EV models. And I thought what was quite particularly interesting was that you're seeing it more as a structural rather than seasonal change because of these dips, this lower car production and how that's impacting flow into the used car market.
Yeah, I think that's key now. You could always if you look at a high level in terms of that global production and that new and used volume into the UK, and you're always looking at 2 million new and circa 7.5 to 8 million used. It was fairly constant, and all you see is seasonality in there, but this is now a significant structural shift as to what's happening there. And before we recorded today, I had the latest global production figures, and I asked you into what you thought the global production was for 2025. But the big question of how much of that came out of China, and there's some shocking numbers in there that where the product is coming from, and the global production for last year, 2025, was up to 96 million. So that's the highest.
And that's a new record, isn't it?
That is a new number. Yeah, it's a high number. I think we've achieved it once, I think, before, but that's not the norm. But I think more crucially with that is you look at what's coming out of China, and in the Chinese proportion of that, or Chinese production proportion of the overall global production, which includes cars and commercials, at that 96.3, was 34.5 million. So that equates to 35.8% of the product for cars and commercials coming out of China. But if you look at just cars, so car production was 71.3 million global production, but China took a proportion of 30.2 million out of that. So that's 42.6% came out of China for 2025, and that's running at a 55% capacity in China.
That is the scary figure, isn't it? That they aren't even near full capacity, and that they're already sort of starting to dominate the global market.
Yeah, it's pretty significant to say the least. Yeah, so I think what we're trying to do in the Insight report is, with all this that's going on, what does it mean? What does it mean for our sector? What does it mean for our customers? What does it mean for our listeners, etc.? And try and distill that into something useful and meaningful. So yeah, as I say, the report is out. You'll see that through my social channels. We'll send a link through the newsletter on Monday morning. And you can go direct onto the Cox Automotive website and pick the report from there in the web form or the PDF. But there'll be press releases on the back of that. But sticking with press releases and exclusive, and I know you were involved with this one, Curtis, but this is, as you say, Q2 dealer confidence rises above the doom and gloom, and we need a little bit of that, of natural and global headlines. And this is some research from the latest quarterly JudgeService Dealer Barometer that's been produced. Do you want to talk about some of the figures and data within that you've been involved with?
Yeah, so as you say, I did work with JudgeService on this, and it's their Dealer Barometer. So every quarter, they what they do is they poll the views of over 2,000 retailers. So it's a big sample to really measure their confidence, the confidence of dealers in their business operations, and also their perception of consumer confidence. And it's building into a fairly sort of accurate record on those confidence levels as we work through the year. So, as you say, despite the constant stream of adverse economic, political, and global headlines, dealers actually have higher levels of business and consumer confidence than they did at the start of the year. And this latest quarterly barometer says that found that the number of franchise dealers feeling positive about their Q2 business performance has actually jumped from 37% in Q1 to 50% in Q2. So, a significant rise there. Those feeling neutral about their business prospects dropped from 43% to 22%, although those feeling negative had actually risen from 20 to 28. But that doesn't take away from that sort of that high level of optimism, really, about how Q2 will pan out for their businesses. And within this, independent dealers were also more positive than before. So they were up from 29% in Q1 to 38% in Q2, with those negative rates more than halving from 43% to 19%.
Yeah, I mean, I say some positive news and optimism coming out of the dealer network there, and commenting on the findings was Neil Adley, who's the managing director there of JudgeService, saying that their latest Dealer Barometer shows the resilience of franchise and independent car retailers who can look beyond the noise and negativity of what is currently a relentless daily news cycle to focus on what they do best, and that's sourcing and selling motor vehicles, cars, etc. So, a great optimistic story there, and positive outlook, particularly from the dealers as to what they look for going into Q2 there.
And moving on to Motor Trade News, the headline there is EV range outstrips UK average mileage, finds Close Brothers Motor Finance. A fascinating bit of research here by Close Brothers, and it's found that electric vehicles now offer almost double the range required for the average UK driver's weekly mileage. So what they've done is they've looked at data from the SMMT, the Society of Motor Manufacturers and Traders, which shows the average battery electric vehicle range has risen to nearly 300 miles on a single charge. And in comparison to that, consumer research has found that the average UK motorist covers 141 miles per week. So the study found 74% of drivers travel fewer than 150 miles each week, while 59% cover fewer than 100 miles. And because of this, Close Brothers are really suggesting that the figures show that range anxiety is increasingly out of step with the real world driving needs of many motorists. And I think this is going to generate a lot of interest in the sector, isn't it? Because that range anxiety has always been held up as one of the main barriers to EV adoption. But this is really showing that for typical users, they're more than covered by the latest generation of EVs.
I think that's the thing, isn't it? As these range and battery capacity continue to increase, and there's a big question of how far do they need to go in terms of that range. I mean, we're hearing that in Beijing next week at the Beijing Motor Show, they're going to be talking a lot about the 1,000 kilowatt charging capacity, and we're only just trying to get ahead around 800 kilowatt charging capacity. So I think the rhetoric is now moving a little bit more onto, rather than range, it's more about speed of charge these days. I think it's more about that speed to charge, because I think the range is there where you need to be now. I mean, there's not many cars. I know mine doesn't go that far, even on petrol. Mine probably does less on petrol in terms of distance than some of the EVs that are on the horizon now. So, how far do they need to go in terms of that range? But clearly that the it's starting to change into, I think your point there, 141 miles of the average journey in an EV on these vehicles per week. That it's more than double now. It's double what? Because you got 2 weeks worth of driving there, haven't you, in the range?
Yeah, and it also makes a valid point about plug-in hybrids. I think they mentioned that the average electric capacity of a plug-in hybrid is around 50 miles, and this study is showing that covers most daily journeys. So even that anxiety there, you've got your 50 miles of effectively electric only coverage, and that seems to be sufficient for typical usage.
Yeah, no, 100% there. But we'll be back after this short break and Ian Godbold with his latest top tips for the market.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors and Cazoo. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media. Next up is car retailing industry guru Ian Godbold, sharing his top tips on how to steer your business to success.
Hello everyone and welcome to this month's top tip. Here we are already at the last weekend of April following a strong Easter period. This month is shaping up well for many dealers. That said, there's still work to be done. We're beginning to see more tactical registration entering the used car marketplaces, which naturally brings increased competition and a need to stay proactive. As we move into May, with multiple bank holidays ahead, now is the time to make sure your used car events are planned and your prospecting schedules are in place, so your diary is filled with quality appointments for the coming weekend. Momentum built now will set the tone for the rest of the trading period. Now, on to this month's topic, the lost sale problem, one of the biggest blind spots in many dealer groups. I was speaking recently with a well-known and highly respected independent dealer, and I asked him a simple question. What is the biggest source of leads for your business? Was it Google Ads, Auto Trader or Meta? His answer surprised me. He said his competitors. Why? Because many dealers invest heavily in generating inquiries but often give up too quickly when they can't immediately get hold of a customer. Leads get marked as lost, the team moves on, no one owns the follow-up, no one goes back. And in a busy market, it becomes easy to justify. I've cleared the outstanding leads, we've sold them. In other words, those customers have been sent straight to a competitor. Automotive marketeers out there, we've all seen this happen. Once a lead is marked lost, it often never gets worked again. Yet many of those customers are still very much in market. They didn't say no, they just didn't buy yet. The reality is, a high percentage of leads never receive a structured follow-up. However, most SMS messages are read within minutes. 98% of SMS messages are opened. Many buyers purchase within weeks of their original inquiry. So the question becomes, why allow the conversation to stop simply because the sales team run out of time? Increasingly, dealers are exploring ways to extend follow-up activity without adding additional pressure to the sales team. One approach is the use of a virtual assistant to continue the conversation with customers who were previously marked as lost, helping identify those who are still actively looking and bringing them back into the pipeline. Responses can be qualified automatically, conversations can be reintroduced into the CRM, and the sales teams can focus their time on customers who are ready to engage. We've seen examples where appointment rates from previously lost sales have exceeded 30%, highlighting the value that can still sit within the existing database. If you'd like to explore how this approach could work within your dealership, some providers are currently offering audits and free trial periods to demonstrate the potential impact. If helpful, feel free to get in touch. Contact me on Ian Godbold at igcdigital.co.uk or simply connect through the messages on LinkedIn. Because one of the biggest opportunities in most dealer groups is often sitting in the leads already marked as lost. Thanks for listening, and I'll see you again next month for another top tip.
Well, Ian, very much on top form there, and really addressing one of the holy grails of car sales, the recapturing those lost sales. And he does actually make a very good argument for deploying virtual assistants to do some of the legwork there.
Yeah, no, I think anybody that's been in the industry for long enough, those lost sales and lapsed sales, it's a huge frustration because, as you say, you pay so much to get them in the first place, and then you lose them, and
Exactly.
you spend all that money on some kind of marketing and things like this that
Yeah.
then you lose them, and they don't go away and throw their driving license away just because you didn't sell them a car that day. They're still in the market for a car. So yeah, I think it's a big frustration, and as you say there, Ian suggested, use the new, tech AI to support you. Keep in touch with these customers and things like that. So yeah, always great to have Ian on and sharing his top tips. And as he said, he's all over the social channels. Just reach out to him, or you can email him on Ian Godbold. That's Ian Godbold at tigcdigital.co.uk. So that's igcdigital.co.uk if you do want to reach out to Ian and see where he can help you in your business in terms of some of that activities that he talks about on the podcast.
And next up, we have a couple of financial year-end stories, starting with AM, and the headline is Swansway posts £10 million profit as turnover tops £1 billion. So some really impressive figures here from Swansway that are reported within AM, and the group has reported a 30% rise in profit before tax to £10.1 million in its 2025 financial results, which go to the end of December 2025, with turnover passing the £1 billion mark, which will certainly see them moving up the AM 100. And the business saw revenues increase by 2.5% from 986 million in 2024 to just over that £1 billion mark. And interesting is very much supported by strong performances across key divisions, and it actually singles out some of its Land Rover businesses and its Motor Match used car operation, which is its network of 6 multi-franchise used car centres, which it added to over the course of that year, and is generating a lot of business for it.
No, very much so, and Peter and the Smythe brothers, supporters and been on the podcast, friend of the podcast. And I must, before we finish this, we want to give a shout out to Matthew Shannon, who sent in the press release under embargo to us. And as always, if you've got anything you want us to share on the podcast, please do drop it into Curtis and me, and we'll look at sharing that if you've got an exclusive for the podcast. But within the story, there is a couple of comments here from Peter Smythe, who's one of the directors there at Swansway Motor Group, saying that 2025 was another good year for their dealerships, and a real reflection of the hard work and commitment from their teams across the business, and that they've continued to invest in their people, their locations, and the customer experience. And it's fantastic to see that effort translate into such a strong result. And just finally on that bit, that saying they're pleased to see the profits increase to 10.1 million. There's Curtis said, up from 7.7 million in 2024, along with the turnover increasing now, as you say there, Curtis, is now in the 1 billion turnover. What is it? What would you call them? A gang? What would you call
club,
that?
Club. They're in the £1 billion turnover club now.
Yes, so well done. I mean, huge congratulations there, and very much a very tight knit family ran business, and great to see the guys doing well with that on the performance.
And we've got more year ends with Pinewood, and the story that we've got here is from Car Dealer, and the headline is Pinewood Technologies announces £8.8 million profit in 2025 financial results. So this is for exactly the same trading period going up to December 2025. Pinewood has posted an £8.8 million profit before tax in its full year results. and profit before tax grew 3.5% from £8.5 million the previous year, with revenue up 29.8% from 31.2 million to £40.5 million. And it reports that for the financial year 2026, underlying EBITDA expectations are in line with the market estimate of £21.3 million, which is up from £16.4 million last year. So some good financial results here from Pinewood Technologies.
Yeah, they've done a great job, haven't they? And Bill Berman, who's the CEO of Pinewood Technologies, he's very pleased, and he's always smiling into when we see his pictures anywhere, but saying that their second year as a standalone technology company has delivered both strong financial performance and significant strategic progress there, that they continue to successfully implement their systems across the Lookers dealership in the UK, made good progress towards US deployment with a pilot program that is now underway, and completed the transformative acquisition of Seez, that's SWZ AI, whose integration with their rich data stack is at an advanced stage and already driving benefits for their customers. So huge congratulations to Bill Berman and the team there at Pinewood Technologies Group. But the final story, and we did warn you that the redress wouldn't go away after the FCA announcement, and it certainly hasn't. And I think we did say that it is at risk of a challenge. And yes, we've got one. So we are heading over to BBC News. And I don't think it's been picked up in the trade media at the point of recording this week, but BBC picked up on it, saying that car finance compensation scheme faces challenge and delay. And this is a consumer group is planning a legal challenge to a scheme designed to compensate millions of drivers who were missold motor finance agreements there. So yeah, this is a consumer voice said that the city regulator scheme, which is expected to cost lenders the total of 9.1 billion, left too many people shortchanged. So yeah, it's not going away yet, is it, Curtis?
It is not, no, and this is really all about the average payouts, which we reported on a couple of weeks back, being £829 per person, which are due to begin this summer under the FCA's plans. But the latest development could be one of several legal challenges and may delay those compensation payments. So it could well be up in the air. But there is a comment here from Alex Neil, who's the co-founder of Consumer Voice, who are challenging the FCA. And he says millions of drivers were overcharged through hidden and unfair commission, yet the FCA's scheme risks leaving many of them missing out on hundreds of pounds that they're owed. People have already been let down once by lenders. They should not now be let down by the regulator that is supposed to protect them. The FCA needs to fix the scheme to ensure it delivers fair and lawful compensation for drivers. So we've been here before, I think, Phil, and we've said that it's going to rumble on.
We certainly have, yeah. And it does. I mean, the story does go on. There's a bit of a deep dive with a bit of the outlining of obviously the redress scheme, what it's intended to do, the problems, obviously what it's trying to solve around it. So, as I say, the link for this will be in your newsletter on Monday morning. But clear to say that FCA, I don't think are directly commenting yet. They've refused to say whether they've been notified of any other legal challenges to the scheme, and they do say that their scheme is the quickest, fairest way to compensate consumers. It seems contradictory that the organisations claiming to represent consumers would seek to delay payouts for millions of people and that was a spokesperson from the regulator commented on that. So kind of I can get where they're coming from, that the FCA was under a lot of pressure to come up with something that would get the payouts moving quickly, so that the lending sector could take the provisions and the financial cost and move on. The consumers can get their payout and their compensation that are eligible for it, but this does potentially delay that from happening, which is then, as the FCA said, it goes against what they were trying to achieve by making it quick and simple to pay out millions of drivers.
Yeah, and you picked up on this. It's interesting that the FCA within this story refused to say whether or not it had been notified of any legal challenges. So we will keep tabs on this story because it's one of those stories that's not going to go away. And if it's not consumer voice, no doubt it will be someone else, threatening a legal challenge. So definitely one to keep tabs on.
Exactly. So hopefully we've covered the majority of the stories. There are not many big stories this week. There are good financial performances there now as we start to see full year trading for 2025 for some of the dealer groups and other providers within the sector there. Say the links to the Insight Quarterly will be on your newsfeed on Monday morning, and do reach out to Ian Godbold if you think he can help you with your business, and he's certainly he's there to support and never lets us down with his top tips.
But that's all for now. So many thanks to you for listening to this Motor Trade Radio podcast. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors and Cazoo. We'll be sharing all the URLs from this week's headlines in our newsletter on Monday morning. To subscribe, just search LinkedIn for the Motor Trade Radio podcast.